So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani, and I'm joined today by David Toupin. David is the founder of Real Estate Lab, the leading multifamily real estate software company focused on managing the acquisitions and analysis process for multifamily investors. We help investors analyze more deals and make more offers. Additionally, David leads a community of multifamily investors with over 150 members called the Real Estate Lab community. David began investing in multifamily real estate at the age of 19 in 2016. To date, David has purchased over $100 million in multifamily storage and commercial assets across the country. David, welcome to the show.
What's up, man? Thanks for having me.
Absolutely. Really excited to talk today. We had a nice offline conversation. David is also a fellow mountain biker, maybe even more hardcore than me. You have 5 bikes.
I don't know about, I like buying bikes, but I don't know how good I am actually at mountain biking. I have fun though.
That's fair. That's fair. This came about because I just got back from 3 days of camping and biking in Moab, Utah. And have heard where David lives in Austin actually has some good trail systems. So we were talking about that. Definitely we'll have to put that on the list, but let's kind of go back to the beginning. You started at 19, which is incredible because not many people get their start that early. So take us back then. What got you into all of this?
Yeah. So I was in college. I first went to college to become a dentist. And after a year, switched out of that into business. Did some internships in like investment banking and consulting. And I was introduced to podcasts by one of a fellow intern actually, which is funny. And I had already kind of had a bug for real estate. I'd always been an entrepreneur, tried to start different businesses, this and that. And I knew I didn't want to go corporate. So I had met actually too a partner at the firm that was buying apartments that had some apartment investments. And so kind of around the same time, I got introduced to the podcast, Bigger Pockets, obviously started listening to that. And I jumped right in. So I think it was April or May of 2016. No, even before that, January 2016, I started working on my residential real estate license. And I got that. I never used it. I did like 3 months of wholesaling, did a couple of deals. But I knew right away I wanted to go bigger and do like commercial apartments and stuff. So, I worked my way right into just looking for apartment deals. I cut off all the single family stuff and I just started targeting multifamily deals. And I realized that, kind of talking about superpowers, right? The numbers was my thing. I really liked the analytical side of things and getting in there and figuring out like, hey, this property makes X amount. We can increase revenue and buy it for this and sell it for this. And here's our spread. And so the numbers kind of came to me easily. And that's really how I worked my way in. Made an offer on a 12 unit, got it locked up, and just kept going from there.
Awesome. I love that. Yeah, you made a really good point. The thing that I love about commercial real estate is, in residential, there's some emotion behind it, right? Especially you mentioned you're being an agent. Here, it's all about numbers. Do the numbers work? Everything's based on, income that the property produces. So I love that side of things as a bit of an analytical mind as well. Okay, so you started with a 12-plex. Did you use your own money? Did you raise outside money? What was that like?
No, dude, I was straight broke. I was, college student. Like I stopped doing those internships. I turned down a couple 6-figure job offers. And so at that point I was like taking night classes, working all day. I had saved up like a couple grand and that's what I was living off of, at my parents' house. And so I basically got the deal under contract and didn't have any money lined up. I had to find a guy like right away to put the earnest money up and sign on the loan with me. And so that was the struggle. It was like find the deal first and then figure out the money after the fact, I didn't want to get stuck in like, hey, I need all the money lined up. I was like, if I find a good deal, I'm gonna figure it out. So got that locked up. I only had to raise it like 175, 200 grand for that 12 unit. And so just started pounding the phones and going to meetups and networking events and all that kind of jazz.
I love it. Shoot first, ask questions later.
Yeah.
Really feels like, you can prime your network and kind of get a feel, but you really have to have the deal in a sense, right? I mean, certainly as our list grows and referrals come in, you're pretty confident in what you can raise. Correct. But, for those that are new, in some sense, you almost need to have the deal first, because then you're just kind of talking to people about it and they're like, yeah, sure. But what
dude,
am I
especially
in?
As a kid, I mean, 20 years old, like no experience, no track record, never raised money from anyone. Like, how am I supposed to get people to want to invest with me without having a deal to put in front of them? Like, it just wasn't going to happen. So, I needed the deal first,
Totally. Yeah. Makes perfect sense. Okay. So you got the 12 unit, raised the money. What market was that in?
Michigan.
Okay. And
is that I was born and raised outside Detroit.
Is that still where you're investing?
So moved to Austin 3 years ago. I still have a portfolio there and I still buy there as deals come up. I'm mainly focused on Texas now.
Texas. Awesome. Love it. Great market. You're right in the heart of probably the top one or two, probably Phoenix and Austin, I'd say.
Yeah, up there. I agree.
So let's get into Real Estate Lab. I'm very intrigued by this. Did you develop the software? Did you work with developers? Kind of talk about how, this originated.
No, I've hired people far smarter than I am to actually write the code. So it's funny. It wasn't really always an intention of mine. And if you asked me 5 years ago, I probably would never have guessed I'd start a software company. But I created an Excel spreadsheet, an analyzer to underwrite multifamily properties. And a lot of people liked it. I just kind of built on it over time. The more deals I did, the more I added to it. And people started asking like, hey, can I get a copy of this as they saw it? And I'm like, well, sure. So I threw it up on my website in, I don't know, was it 2019? And I sold like $100,000 worth of the spreadsheet that year. And I'm like, what the fuck? People need this. There's a market. Sorry to swear on your podcast. Okay. But no, there's a market for this. People need a tool to underwrite deals. There's a lot of big groups buying apartments that are running through 10, 20, 30, 40 deals a week and making tons of offers, right? And there's a lot of other stuff that comes along with acquiring properties, managing it through the transaction, organizing all your documents, communicating with your team. And so I just figured there's a lot more to this, and there's no platform out there that people are using for their acquisitions other than just a spreadsheet, Dropbox, and maybe a CRM, like a hodgepodge of different tools. And so we've combined it all into one. It's called Real Estate Lab. We launched our beta in January, but we're a couple months out from launching our first kind of V1 of the software. So mid 2022, it'll be available. And so I'm really excited. It's been probably a year and a half, 2 years in the works. And I think it's really going to change the way people look at deals and acquire deals and help people acquire more properties, stay more organized.
Awesome. I love that. So kind of talk about, what was so different about your underwriting model, or were there anything different that made so many people so interested in it?
I think it's just simple. Like a lot of models you see, not to mention the fact that some of them are really confusing off the bat, but a lot of them have errors. I've seen people like, oh, I bought this analyzer and I look at it and I'm like, well, it's not calculating your return, your ROI correctly, or it's not adding this or that up. So people need a sheet that they can trust, first of all, that everything's linked correctly, has the proper equations, because if you're making multi-million-dollar decisions off a spreadsheet, that thing better be accurate, right? And correct and tested hundreds, if not thousands of times. And so, our model has been tested tens of thousands of times at this point, and we've gotten a lot of feedback and improved it. So I think that's a big part of it. Just on the spreadsheet itself, on the model.
Awesome. I love that. That's so true. Like you mentioned, when you're making those big decisions, you need everything to be communicating and giving you the correct analytics. So, all right. So you've got that piece of it. It sounds like this is a full cycle deal software though. So talk about the other aspects of it.
Yeah, so it's kind of laid out visually. So it's almost like a CRM for multifamily deals. You add a property to your pipeline, and then once you add a property, you can go into that property page and you can work on the deal. You can manage your documents. You can take notes on the project. Coming soon, you can associate tasks and contacts with the project, and then you can actually upload in Excel a rent roll or a T12. It's Excel for now. It will be PDFs in the future, but you can upload a T12 or rent roll. It will our software will read those documents, pull out the key data, and put it into the analyzer when you open the analyzer up for you. Yeah. So normally you'd go through a rent roll, right? I know you've analyzed deals before, I'm assuming, and you have to figure out the unit count. If it doesn't have a table on there with the unit count, you got to go through and count them on your own, and or create an equation to count them, and then pull out what are the average rents right now, so that I know, like, hey, how much am I going to be bumping rents, all that kind of stuff. And so you just upload the rent roll in Excel. It'll read it. It'll pull out that unit mix and put it right into the analyzer, so that you don't have to spend the time to do that. So our goal is within the next 12 months is to, when you open up the analyzer, we can use our data and market data and your rent roll in T12 to pre-populate as much of the inputs as possible. So all you have to do is go in there, spend 5 minutes making some tweaks, and it's done, right? We can pre-fill for you your operating expenses based on historical market data, financing terms based on today's interest rates, all that kind of stuff we're working on pre-populating. It's not fully there yet, but within the next 12 months, it will be. So we're trying to make the process easy for people.
Wow. That's incredible. And I know that that's kind of, well, maybe not newer technology, but definitely one of the hardest parts is that sort of being able to read a file and know where all the data goes and all of that. So that's incredible. Is there anything out there like that you've found that operates similar?
No, I mean, there's a couple companies that do the rent roll and T12 parsing. They charge $400 to $600 a month. They're really for institutional heavy clients, I'd say, and that's kind of all they do. They parse the rent rolls and T12s, and they do it well. But now both of those companies that I know that do that have been acquired by Berkshire Hathaway. I think the other one's Walker Dunlop, Enodo, and Red IQ are the names of the companies, and they're really geared more towards institutional clients, and they're expensive. So our product's significantly cheaper at $100 a month, and we do a lot more. You can create LOIs online. We have a little button, you click it, and you can just type the terms your LOI. It produces an LOI for you. So there's a lot of other stuff that we're bringing to the table.
Wow, that's awesome. So is this just for multifamily? Can you do it with all asset classes?
Yeah, by the end of the year, it's going to be opened up to self-storage as a second asset class. And then eventually we're going to get into office space, commercial, that type of stuff.
Awesome. Yeah. I love that. What are some of the other asset classes you're involved in?
So currently I own primarily multifamily. I'd say it's about 75% of my portfolio. I own some office space, and storage self-storage make up the other 25%.
Awesome. And what have you found? Did you have the office space before COVID, or was that post-COVID?
I bought it during COVID, and it was vacant building. We did a full kind of gut rehab on it, refaced it, and it was I'll be honest, it was tough to lease it during the time, because it was definitely, it's a seller's market right now in terms of most real estate, but when you're talking leasing, it's more of a tenant's market, right? Because there's a lot of people vacating spaces. Fortunately, it's in Michigan. It's in a prime downtown area, like right off Main Street. And so we're in a great location, and we just leased a space to F45 actually, which is really cool. So we're doing their build out right now, the workout company. So I wouldn't do a ton more office. It would have to be like very selective. But that one specifically is a cool, unique project.
That's awesome. And that's great that you've been able to make it work and certainly that's a testament to the location because
Yeah.
you can't just buy an office anywhere and expect to fill it by any means.
Correct. Yeah, exactly. Yeah, and I guess this one, yeah, more retail and office combination, which is nice. So, but office, just straight up office right now, I think it is tough. You have to be in the right city, the right market, right location, because I mean, people are still working remotely, and I think that trend is just going to continue. Some people will go back to work, but a lot of people are now trying. You know, these big companies that have leased out multi stories and these big office buildings, they're starting to like sublease out, you know, floor to make up for the loss in space that they're not using. So it's interesting. I don't know anyone that invests heavily in office that I've been able to talk to, but it's you know, I don't think the outlook is super positive on office.
No, agreed. Unless it's like, like you mentioned, retail office or like those small suburban
Hmm.
type places. But yeah, I mean, we have what's called the Silicon Slopes here, which is basically just our valley and all the tech startups that have
Oh
been
wow.
rolling through Salt Lake City, and they're doing the same thing, right? There's buildings that now have 2, 3 floors that aren't being used because of
Yeah.
hybrid or still completely work from home. So they're having to sublease and kind of get creative, and you have buildings that are just sitting empty. So it'll be
Correct.
interesting to kind of see what, that landscape, that asset class looks like moving forward. And, what these buildings that are already there, could be turned into, I guess.
Correct. Well, even as you know, for us as a software company, we're small. We only have 9 people in house, but still, you know, I'd love an office, but everyone does really well working remote and it's productive. And for me to go and pay for a lease just isn't or buy an office building just doesn't seem necessary. So, you know, I think a lot of other people will kind of feel the same after what's happened, and technology allows us to all just work remote now. You know,
Yeah, and that's a huge reduction in expenses as well when you're not paying a lease. So,
totally.
that's a huge bonus for the bottom line. So, I want to talk a little about storage. Storage is a very intriguing asset class for me as well. Working on a ground up development deal actually out here in Utah
Oh,
for
very cool.
storage. So, what markets are you in? What do you like about the asset class, and kind of what's your strategy behind it?
Yeah, just Austin and surrounding metro area right now. So I bought my first facility in December. I liked it so much that I decided right after I bought it to start to launch a self storage fund, a $10 million fund. So I'm actually launching it this week. $10 million fund. We've got that property is going to be included in the fund, and we've got the next 2 properties under contract already. Our goal is to acquire 400,000 to 500,000 square feet in the next 2 years, hold for another 3 to 4 years, improve them, develop upon them, and sell off to some sort of institutional fund or REIT or you know, another type of group like that. There's just so, you know, the way that this city in Salt Lake is growing incredibly fast too, right? That there's probably a lot of tertiary markets and small towns around Salt Lake City that are now being kind of absorbed into the major metro area. I don't know if that's true where you're at.
Yep.
And same thing with these other markets like Tampa, Phoenix, right? These other fast growing markets, Austin, obviously. And so we're finding a lot of opportunity in the mom and pop facilities where maybe they own 20, 30,000 square feet of storage with another 4 acres of land attached to it. And they bought it for $200,000, you know, 20 years ago or whatever, right? Super cheap. We're paying them now, you know, 2 million for it when it's worth 2.5 or 3. They're making a killer deal, right? They're like, wow, $2 million is incredible. But we're getting it below 60, 70 cents on the dollar. And then we're going developing and turning it into a 8, 9, 10, $11 million facility. So that's kind of our philosophy right now. And we're focused on, you know, growing small markets surrounding Austin. You know, something that we know in the next 5 years will be absorbed into that metro area.
Awesome. I love that. Such an incredible strategy. We're using the exact same one. Ours is about 25 minutes west of Salt Lake City. It's called Tooele. Same
Nice.
thing. This one's a little smaller, but there's a mom and pop right next to it that we're in conversations with. And yeah, what we're finding, and I'm sure you're finding the same things, is they're just not raising rents. They're not
No.
really doing
What are they charging
anything.
on the one you're buying right now? Like, what's the average?
Like $10 a square foot.
Oh, wow.
Yeah. So it's like, the market's it's growing out there. The market's right around $12 a square foot on average. So, they're below market. They're not raising it. Same thing, they've got another 2 acres that, you know, I, I have mixed feelings about RV storage. Personally, I think for the size of the pad, you're not making what you could if you turn it into storage. But what are your thoughts?
Yeah, I don't know yet. So, one of the three sites that we have lined up is it's 9 acres with 20,000 square feet. We're buying it for 1,005,000. It's on like a main highway. That one's I love that deal. And we're taking 4 acres. At least the plan, we're taking 4 acres of it, and we're going to do boat and RV, some covered, some uncovered. And then the other 3 acres that's available, we're going to build some climate control, like another 40,000 square feet or so of rentable climate control. And the reason being is because I don't think if we filled up that entire 9 acres with storage, I think the market's a little too small to absorb all that. So, we're like, hey, parking is a non-expensive way to convert that land into income producing in the short term. And then, hey, if we absorb that 40,000, eventually we want to add more, we could always take the parking away. So I think it's kind of an interim kind of phase one type of plan. But yeah, price per foot, you're probably right. You definitely could turn that same acreage into much more valuable property by building climate control storage.
Absolutely. Yeah. And you really nailed it, right? Obviously, where you're at is probably a huge need for boat and RV storage. Same with where we are. Everybody
Oh
has
yeah.
toys out here, and for different reasons, like maybe your HOA won't let you, or maybe you don't have any space at all, right? Like I live in a townhouse. Luckily, we have an RV lot, but if you didn't,
Oh
you would
wow,
need
nice.
storage. So,
Yeah, I can't even keep a boat in my driveway in my neighborhood, right? My HOA is like on it. I can't keep a boat. There's no trailer, in the street. So yeah, you have to go park it somewhere.
yep, absolutely. And, you can kind of almost name your price, right? Like, it's a really, really awesome opportunity. Like you said, kind of phase one, take up that space. So it's at least reducing income. And then I would imagine that in 5 years, there probably will be a need for more storage, but
Correct. I think
uh,
so. Yeah, I agree.
everything's trending that way at least. And if not, then, at least it's producing income because people are always going to need those spots.
Yeah. It's a funny fact that I was talking about with somebody the other day. Texas actually has so a lot of people in the storage business, right? We use this square foot per capita, and so they're like, hey, is there an oversaturation or is there too much storage in a market? And it seems to be that most solid markets, you're trying to look for 5 square feet of storage per person per capita in a market or less, right? For there to be supply, not too much supply. Texas actually has like 6 to 7 feet on average, so they're higher. But what's funny is in Texas, nobody has basements. I don't say nobody, but in most of Texas, people don't build basements, which is weird for me. I'm from the Midwest. I don't know what Salt Lake City is like, but in the Midwest, everybody has a basement.
Same. We all have basements here.
You have all basements, yeah. So I thought about that. I'm like, well, it's funny though. We have more storage, but there's no basements here, and primarily it's because of the consistency of the ground. It's tougher. It's more expensive to knock through like the limestone and whatnot to build a basement. So that's why people don't do it. But because people lack that extra storage, right? Growing up with you guys have a basement, you store a lot of stuff down there. People, need a place to put all that extra stuff that they have at their house where they don't have, a spot to put it. So I think that plays into it a little bit.
Absolutely. Yeah, that's a good point, and definitely not something that you would typically think about,
Yeah,
but is a very valid concern, as well as, different economic times, some uncertainties coming along, people maybe downsizing to get
correct.
ahead of it. And that's what makes it a very compelling asset class. And, starting to get some good deal flow and still seeing, 5 and 6 caps, which, you're just never going to see in multifamily anymore. So
Yeah, correct. Yeah, we're seeing even 7s, sometimes 8s on the storage, which is crazy. Just
Wow.
with some rent bumps, we're seeing, with rent bumps, we're seeing like them 9 or 10s. So yeah, and you won't see that in multifamily. I mean, right now apartments are a 4 cap is the average in Austin,
Yeah,
even for
that's
C
insane.
class. Yeah, it's unbelievable.
That's so crazy.
So
So are you guys going to utilize on-site management, or are you going to go full automation? What's kind of your plan?
yeah, the management company we're using, they seem to not love the full automation. They've tested it out, and they still like having somewhat of an on-site presence, even if it's just a couple of days a week. So we do have roaming managers that will be on site. We're building leasing offices into our sites, but the way we're building them, we could always turn them fully automated if we wanted to. So
Yeah, I
yeah,
love that. And it's definitely a little market specific as well, like what's happening in the market, different things like that. Bigger areas, I would say on-site's probably more ideal, just because, more traffic, potentially
correct.
different variables like that.
Yeah. And I honestly don't know the answer that well to that question. I'm just going off of what our property manager said. They've been doing this for about 30 years and manage a million, a little over 1 million square feet. We told him at first, like, hey, we want to do this fund and do fully automated properties using technology. And he's like, dude, you're going to lease these things up a lot faster by having somebody on site. And I'm like, all right, we'll spend a little bit extra, have somebody on site, but if that helps us with the lease up and whatnot, I think it's worth it.
Absolutely. Absolutely. It's important to, obviously get that cash flow as quick as you can in a certain sense. So are these development deals then?
They're all hybrids. So we
Hybrid.
want to buy stuff with existing storage with additional land to build,
Love it.
because then they're already zoned, right? You just need to go get approvals if you're in the city. You don't need to rezone anything. It just makes it a little bit easier.
And did you just call the owners and just ask if they wanted to sell? Was that kind of your approach?
Yeah, I have 2 acquisitions guys, and they send out mailers and they cold call, and then they bring us leads. Yeah,
It's
and we've
awesome.
got some VAs that cold call as well. So yeah,
Love that. That's so great. So important, because they're, they really are just going to hold on to it until until they
yeah,
get the right offer. And, that's what's great about being able to come along and, offer to buy the farm.
correct. Yeah, and it's like I said, they've held it for a long time, and they bought it dirt cheap, and and now they're getting a really good price from us, and there's still a good amount of equity spread in it for us to kind of take it forward and do that next step, and we'll put the work in to develop it out, but that's where we're going to create just like a really large equity spread. So I'm just seeing a lot better returns in this right now than I'm on the multifamily side.
Absolutely. Could not agree more, which is where my head's at on it. Like I said, we were talking offline, still going to be doing some multifamily stuff. Obviously, still an intriguing asset class. I know investors like it, but man, self storage, just the yield is a little higher right now, for sure, to say the
Yeah, it
least.
is.
So
It is.
very compelling. And so I'm assuming that this fund is 506C.
Yes. Yep.
Awesome. Yep. Makes
Yep.
perfect sense. Cool. Well, we are coming close to time. I do have 5 questions I ask all of my guests. It's the final 5. First
Sweet.
question is, what is the best advice you've gotten from a mentor?
In real estate, buy right. You can't. I mean, real estate's a simple business, and it's hard to mess up if you buy right. If you're buying properties for the right price, you will pretty much always do well.
I love that. It's so awesome. What is it about your career that makes you feel like you're fulfilling your why?
I love real estate. Real estate's just a fun business, man. I love running and gunning, finding deals. I'm definitely a junkie for it, and so I feel fulfilled. I don't feel like I work. I can work 100 hours a week, and I just don't feel like I work. It's fun. I meet a lot of cool people like yourself, and it's a cool business to be in.
I love it. Couldn't agree more. So true. What's your favorite non-real estate or investment related book?
Ooh, um, Never Split the Difference. The
Nice.
negotiation book. That is a sweet book. Everyone should read that. Chris Voss.
Yep. I've had a few people recommend that book. definitely on the list. If you could have any superpower, what would it be?
Oh, geez. A superpower, like a superhero.
Yeah, anything.
Oh man, that'd be kind of cool to be able to like teleport anywhere.
I love it.
Just be anywhere,
Teleportation.
anytime,
Yeah, teleporting, flying. Those are
or flying.
yeah,
Yeah.
that's my answer. But we've gotten great ones. We've gotten underwriting. Someone wanted their
Oh,
superpower to be
yeah.
underwriting. So, you
That's
know, you
funny.
can, it's a very open question. Awesome.
Yeah.
And last one, what's the best way for people to get a hold of you and learn more?
Yeah, you can go to, so my two companies are realestatelab.com and ToupinHoldings.com. If you're looking to invest, Toupin Holdings, if you're looking for multifamily software or our real estate community, realestatelab.com.
Awesome. We will link down the show notes. David, thank you so much. I appreciate your time.
No problem, bro. Thanks.
Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, you know it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.